Yo, what's good? It's your boy Nick Dob, back with another banger. Today, we're going to be taking a look at gold, breaking it down, looking at the monthly, weekly, daily, and maybe even the 4-hour time frame today. Definitely going to be showing you guys some of the P&L profit we had this week, totaling up around $1,900. Let's get right into it. All right, so looking at the charts here, we are going to start on the monthly time frame here. Honestly, this breakdown video is gonna be pretty quick, only because as you can see, gold has been trending up for the past couple months here. About to be a year if we continue this bull market. You can see here this little circle that I have here is when the bull market really started after the shutdown in 2011. You can see after 2011, gold has been moving literally in a boat for almost 10 years. As soon as gold hit that 10-year mark, the breakout. And ever since then, you can like I said, pretty much back in 2024, when the breakout happened, gold has been going strong. The bulls have just taken over, and it has been a rally. And like I said, same thing for the weekly. I'm looking at how after this breakout here, we had clean higher highs, and then we had clean higher high here until we reach this messy consolidation here. So is this consolidation letting us know that the bears are back? And are we going to see more consolidation, maybe into a bear swing for some lows? Or are we going to continue the bull? Like I said, just looking at previous consolidation, we could see more consolidation, maybe even back into this zone here before we see some more bullish price action. But this is looking at higher time frame price action. Looking into the lower time frame like the daily and the more intraday, the 4-hour, we can clearly see that gold is still respecting the lows and fulfilling price and continuing up. So here you can see that price filled this fair value gap here. This is a clean, this was honestly the best daily fair value gap that I was looking to hold long into, but I missed it. This one right here, you can see this fair value gap retested perfectly towards that 50% level, and once it got to this level here, gold has never came back. So that was one of the levels that we were looking at when we saw this pattern start to form, and we caught it out back when there, and you can see that gold respectfully hit the target. So with that said, we have caught some trades this week, and I do want to show you some of my P&L from this week before the video gets too long. Let's get that breakdown going. Okay, so I'm using the playback feature on TradingView, and I'm just going to quickly show you guys the setup I took Sunday night into Monday morning, which got me that P&L of 1900. Very simple, guys. Like I always tell you in every video, so far we're looking at the Asia and London session. The big old orange box and this green box that is going to form from 12 a.m. to about 6 a.m. my time. So during these time zones, this is where price likes to head towards liquidity and either rejects or break out. In this case, we had a nice breakout. And how do we catch this breakout? Super simple. If we play some candles, I see by 1:30 I have a close, and this close is above the Asia session high. So during Asia session, from the market open until midnight, we had a high here and a low here. So with that said, if I'm breaking out during a new session, if I'm breaking out of a previous session high or low, that is considered my liquidity zone. That's one of my key levels that I look at to then take action. And the way I took action here is I waited on the 15-minute to get a nice candle closure above previous session high. Once I seen that, I hop down to my 5-minute and I find out what do I see. I see, before this level happened here, a fair value gap right here. And I'm going to label that my 5-minute fair value gap. If you don't know what a fair value gap is, it's simply a 3-candle pattern. It's when you have one candle here, another candle in the middle, and another candle on top. What you want to see is the middle candle be explosive. You want to see that explosive candle make a gap between the two bottom and top candles. Once you see this gap, you can label that your fair value gap. So we're going to label that a fair value gap here, and we're going to label it 5 minute. Then we're going to hop down into our 1 minute time frame, and this is where I look for my entries. So if I know at this 5 minute fair value gap, I'm breaking out of the Asia high, this orange line here, I can just wait for price to come back down, fulfill this fair value gap, take my trade, and wait for it to bounce. Simple as that. So what are we going to do? We're going to wait for price to come down. We're watching on the 1 minute now. We're just seeing price come up and down. We see price touch our Asia high and reject, but it didn't make any explosive move up or down yet, so we're still just waiting. But we do see a break below this key level, so now we're waiting. You could have maybe took a trade here off of this 1 minute fair value gap, but you would have to put your stop loss below this candle here, and it would have taken you out. I'm waiting for my 5 minute fair value gap because this is a nice explosive candle fair value gap. So I'm waiting. I'm waiting. I believe it happens around 2:15, 2:30 is when I take the trade. So we're just waiting. You see how close it gets to my fair value gap, but it never touches it yet. So I'm just waiting. I'm being patient. Boom. That 1 minute can't, in 1 minute, 1 minute I had to take this trade. In 1 minute. This is the only time it ever comes back down into this fair value gap, and it rejects it clean. So in 1 minute, I get in. Boom. Stop loss right below this candle, right below the fair value gap. That's the opposite way. Boom. Right there. And then I would put my stop loss, my stop loss below here, and my take profit would be right up to the previous week high. Why? Because that's technically my next liquidity zone. That's the next zone that makes the most sense. It's as simple as that. Where would I be targeting? The next key level, the next level of liquidity where price has been playing along. So I'm targeting that level. Let's put it on the 5 minutes so it's a little quicker. And you can see how quick the market reacts to that level. It's 5 minutes. That's 10 minutes, 15, 20 minutes, 30 minutes. I'm already there. In 35 minutes, I made 100 pips. Boom, just like that. I can't stress enough how simple this strategy is, guys. I'm going to keep showing you guys these sessions, breakouts, reacting to liquidity levels as simple as reacting to a previous week high, reacting to a previous day high, or even, like I said on this trade, reacting to session high, London highs, Asia highs. If you're trading New York session, you're going to be looking at Asia and London highs. Because I like to trade London, I'm looking at Asia highs. It's very simple. You just have to learn how to find these fair value gaps and learn how to react to them. And price will let you get these gains consistently because you found a way to mechanically make the market work for you. Stay tuned for more videos like this. I know this breakdown made it a little longer, but I hope you guys learned something today. And I hope you guys join the Discord down below. Free Discord. All my links down below are free. Of course, clicking on them and signing up does help and benefit me. But until next time, you guys, peace.